Hi, I'm Ernest Mazansky. I'm the head of tax practice at Werksmas Attorneys. The extent to which the tax efficiency of that deduction applies depends upon what you are sheltering. In my experience, one gets the most bang for one's buck if one is sheltering a capital gain rather than one is sheltering ordinary income. For example, if you earn a salary of 100 Rand, in order to shelter that, you need to invest 100 Rand in a venture capital company. If you make a capital gain of 100 Rand, only 40 Rand of that as an individual is subject to tax. So only 40 Rand needs to be invested in a 12J company in order to remove the tax burden. And that, of course, leaves you with the remaining 60 Rand to utilize for other purposes. So it's much more efficient to use your 12J investment to shelter capital gains. But of course, that is one example, but that does not mean that investing in venture capital companies is not equally beneficial in all other circumstances and for all other taxpayers. The major issues that any investor in a 12J company needs to concern himself with is that if there are different classes of shares in a particular venture capital company, that no one individual investor will hold 20% or more of a particular class of shares, because that could cause a particular problem, and that after 3 years there is an adequate spread of investments made by the venture capital company. Because if that adequate spread has not been achieved, that could cause difficulties and could cause effectively a tax burden for the venture capital company, which will adversely affect the returns to the venture capital investor, i.e. the investor in the 12J company. And the other thing that must concern an investor is that the management company is ensuring that the 12J company is investing in the appropriate underlying businesses. Now, a venture capital company can invest in anything other than companies that undertake certain what are known as impermissible trades. There is a list of certain companies which the law says a 12J company may not invest in. These include things like financial services, professional services, liquor, arms and ammunition, tobacco products, immovable property, except as a hotel keeper, and so on. So as long as the underlying companies do not invest in those trades, the companies are free to invest anywhere. There is, of course, a maximum size into which the venture capital companies can invest, because after all, they're designed to stimulate small and medium enterprises. So the maximum that the venture capital company can invest in is a company that after the investment has gross assets not exceeding 50 million Rand. But of course, that does not mean that after the investment, the company cannot grow by, for example, taking on further debt. There's nothing wrong with that. The idea is not to cap the growth, but merely to ensure that at inception, the underlying company is not itself a large company. At the end of the day, though, when all is said and done, you must remember that this is still an investment of your capital, just like any other. Of course, when you make an investment in a company, whether it's on the stock market or through a collective investment scheme or in a private company, your 100 Rand investment costs you 100 Rand. When you invest in a venture capital company, if you're an individual, your 100 Rand investment costs you only 55 Rand. But it is still your 55 Rand that is at risk. And if you lose your money, you're still losing your own 55 Rand. SARS is only paying for 45 Rand of that investment. So you still need to know that your money is going to work for you and that you're going to get a decent return on that investment. I hope this talk has helped you a little in making your investment decision.